All right, guys, we have seen the second and third largest bank failures in the history of this country over the past 3 days. Silicon Valley Bank and Signature Bank. Here are the two fundamental reasons we're going to continue to see banks come under pressure. These are facts, not opinions. Banks have two ways of making money. One, loans, and two are their investments. And the increase in federal fund rate over the past year has crushed them on both sides of the equation. So let's take a look first at the loans. What you're looking at here are mortgage applications, a huge driver of bank profits. And as you can see, starting in 2021, when the Fed started raising rates, they have fallen off a cliff, evaporating the profits that this was once providing banks. And because of that lack of demand for loans and mortgages, they've become more reliant upon their investment book. So when you deposit money in a bank, they pay you something like 0.01%, and they take that money and invest it in bonds that yield 5 to 6%. And so long as there isn't increased withdrawal requests, that works. But let's take a look at what's going on. What you're looking at here are household savings rates. And to state the obvious, inflation is crushing people and driving people to withdraw money out of banks, decreasing that savings rate. We're at the second lowest savings rate we've been since 1960 right now. And as people continue to deplete their savings by withdrawing money from the bank, banks are now forced to sell bonds. And as the Fed has taken up rates so significantly over the past year, bond prices have come screaming down. And that causes losses on these banks' investment portfolios. And it's creating solvency issues. As people withdraw money out of the bank, they're forced to sell those bonds at a loss. And this is where the feedback loop starts. Pay attention here, guys. I'm not saying this is a 2008 great financial crisis scenario where banks get squeezed across the board, but weaker banks are going to continue to see pressure here. But don't just take it from me. Look at regional banks. They're down 15% today. Be careful, guys.